and welcome to Closing Trades right here on ET Now with me, Aisha Faridi, Ajay Sharma as well in the studio. And what a recovery in the market. I mean, to think of it, we were languishing below that 19,300 print, and then came the news of Reliance Jio Financial Services shares getting listed on Monday, and the kind of trajectory or the orbit is that Reliance is now sitting on, that's clearly pulled the markets higher. So we're back at that 19,350 level in trade, and the single-handed contribution coming in from Reliance Industries alone, which is rubbing off on the Nifty. Because if you were to look, sans RIL, not much is actually holding out in the green. IT sector for surely is underperforming for a consecutive week. TCS, Wipro, Infosys, TechM, these are all some of the biggest large cap losers today. But yes, Reliance, as we speak, is holding up very, very smartly in trade, as is the Adani group of names as well. So look at Adani Enterprises, Adani Power. In fact, the combined total market capitalization of the Adani 10 Adani listed stocks is up by about $4.5 billion, and it's the maximum market cap that they have seen an appreciation since that Feb 1st decline in the Adani group of names back when the Hindenburg news was at its peak performance. And it's interesting to see that our markets are recovering, I mean, thanks to only RIL actually, because the global market sentiment is surely beleaguered. Beat Asia because of the Japan inflation numbers, Evergrande wars, they continue. Asia has had a weak close for itself, and even Europe is starting off on a very, very weak footing. So clearly, we are the world outperformers, so to speak, as of now. And one stock can do it alone.
Yeah, well, it triggered the short covering.
Yes.
But if you look at the composition of the market, it is not only RIL which is leading the index. Auto stocks have come back very smartly. Some of the banks like Axis Bank has come back. Look at Eicher, Maruti and Tata Motors. All three are gaining very smartly in trade. So the trigger definitely was RIL. But it appeared that people who were just sitting on the edge and covered positions. So all of these stocks are also back to days high. Banking is also getting a lot of help from private sector banks like Axis Bank and few others. SBI too is doing well. But Nuresh and Kunal are both here to help us identify specific trading ideas and what to make of the trade so far. Kunal, I'll start with you. Today was the fifth time in the last 3 months that we went dangerously close to 19,200. But rebound. Is this support which you've taken around that point? Because you told us in the morning 19,300 closing needs to be protected. It appears that that's been protected. So will it be seen as a sign of strength? Would you carry your long positions?
Well, yeah, I would say it's a sign of strength. But on the other hand, I think I'm not sure whether consistent attempt towards this 90,200 to 50 mark would eventually lead to a breakdown. So I've been maintaining the stance since the last few days that we'll have to wait out for a confirmation of a close below 90,300 mark to actually initiate a fresh short. Other than that, you can just sit out on the index trends, because there's so much of opportunity on the stock specific front, which one could probably try and trade with in this kind of a listless market. As such, Bank Nifty, I think Bank Nifty today has seen a good jump. Reliance is one of the major contributors for that. So we can just expect that this move trickles into the other large cap stocks on a relative price gain rather than just a recovery from an intraday sell-off.
Nuresh, you've had quite the conviction on RIL, right? Pretty much along this week, it's been one of your picks on a daily basis. What do you now read on the charts now that we're back above 2550 thereabouts, 2570 actually right now?
So getting into a very important resistance zone. If we look at the highs before the Jio listing and merger were to be done, the high was 2850, and given 250 rupees for Jio, 2600 becomes the adjusted price. And once we sustain about 2600, that would be a multi-year high. That would be the high which was made in the last 3 years. So at 2570, 2600, 2650 is a resistance. But if it can cross, then it becomes a multi-year high, and which actually makes Reliance Industries the leading stock in the index as well. And what is missing in the current market conditions for the indexes, there has been no leading stock. We have the heavyweights only drifting. You have the whole IT sector drifting lower. You have HDFC Bank, Kotak Bank, and all the other names are drifting lower. So if this breakout happens beyond 2600, 2650, so my target is 2600, 2650 for the short term. But if we sustain above that, that makes Reliance Industries a clear-cut leader, and that could surprise on the upside. So for now, one could shift their stop losses to 2520 and ride on to Reliance.
That's RIL in trade for you in focus. Jio Financial Services is going to list on August 21st on BSE. That's coming Monday, and that's clearly keeping the stock buoyant in trade. Aside of that, there's also GMM Pfaudler. It's up a good 10% from the session lows. Pfaudler Inc., remember, has exited the company, and Chris Capital, as we understand, has acquired a near 10% stake in GMM Pfaudler. That's recovered lost ground now, sitting at 1500 plus levels. The South Indian Bank as well, the RBI nod to appoint PR Seshadri as the MD and CEO with effect from October 1st for a term of 3 years. That's auguring well for the sentiment on this stock. South Indian Bank will just come up for you on your screens. That also is going very, very smart in today's trading session. There you go, up a good 8% on the back of very big volumes. That's the move on South Indian Bank. It was a gap up move to start off trade with, and it's only managed to build on from there. There's, of course, Manappuram Finance as well, which is actually seeing the steepest decline in about 3 months. It's had a block deal earlier today, and that stock is still under pressure, down about almost 4% as we speak. Yatharth Hospital, relatively new listing. It's posted its Q1 numbers, and it's seen the highest year-on-year growth rates in the hospital industry by far. That stock has gapped up 9% and still going very, very strong on the back of decent volumes as well, albeit. HOEC, though, that's one stock which is under pressure today. Untimely information on the field shutdown, lower production from Duroc, the consistent change in the BAT outlook, that's clearly not auguring well for the sentiment on HOEC, which is now down almost 13%, over 8 million shares traded on this stock already. But back to Jio and back to RIL, which is clearly the big star performer. Let me, in fact, take it across to Soumit and try and understand how the listing is going to go about and what does it really mean for RIL shareholders. Soumit?
Well, Reliance Industries, a demerged entity, Jio Financial, will be listing on the stock exchanges on August 21st. Now, the discovered base price of Jio Financial was 261.85, and at this price, if you see, the market capitalization of Jio Financial on listing would be close to 1.66 lakh crore rupees. Now, at 1.66 lakh crore rupees, Jio Financial would be the 9th largest financial institution, listed financial institution in India. Now, Jio Financial will remain a part of Nifty 50 and Sensex for the next 3 trading days and will be removed from both the indices on Thursday. That will be the 4th trading day. Now, because of this removal from the indices, there could be some passive outflows because there are some funds that have been passively tracking both Nifty and Sensex, and as the stock would be removed from the index, there could be some amount of outflows owing to this front. Now, on Nifty, what brokerages are expecting is there could be around 90 million shares of outflow, which is equivalent to close to $290 million US, and in Sensex around 55 million shares outflow could be expected, which is close to $175 million US of selling. That is expected when it comes to Jio Financial, because it will be removed out of Nifty and Sensex from Thursday. Now, what do we know about Jio Financial? It has been led by ex-ICICI Bank veterans, that is KV Kamath and Hitesh Sethia, and this business will be, and Jio Financial will be getting into the lending service business to consumers, merchants, and they're also looking to get into insurance payments, digital broking, asset management as well. Now, they also aim to build in strategic financial partners going ahead. Now, if you see, along with this, Jio Financial is expected to have a AAA credit rating, which will lead to lower cost of funding for the company, which would be an upper hand for Jio Financial in the NBFC market, and it has a very large distribution footprint already settled. It has more than Reliance has more than 18,000 Reliance retail store where they could cross-sell Jio Financial product. It has more than 78 crore footfall on an annual basis in its retail stores, and also it has nearly 43 crore telecom users to whom also it could cross-sell Jio Financial products. So keep an eye out for Jio Financial and Reliance Industries in trade. Jio Financial is expected to list on August 21st, and right after a week, Reliance Industries AGM is also going to be held on August 28th.
Right. Okay, Soumit, we leave it at that. RIL clearly the star performer today. Let me also welcome on board Pankaj Murarka. Pankaj, hi, afternoon. Good to have you on the show. Let's start by talking about RIL, Pankaj, because the last big move came the day the demerger news was announced of Jio Financial Services. Since then, we've not really seen much of an excitement in RIL, right? And of course, the market also has, eased off. But now that Monday you'll have the listing of Jio Financial Services on the bourses, wanted to understand whether the street will now, look at it as a precursor to other demergers, perhaps retail and then Jio?
Good afternoon, Aisha. Definitely, I think so. Meaning, I think it's a matter of time. All of those in terms of retail and other demergers might not be imminent. It might take a while, but I certainly think over a 3 to 5 year period, all of those should play out. Talking about Reliance, I think we need to put things in perspective now. It's a pretty large conglomerate at close to $300 billion of market cap. On their size and scale, to move the needle, they need to do projects which are like more like 10-20 billion dollars at least, to say the least, to really have an impact on financials and move the needle on balance sheet of Reliance. So, and I think given the way Reliance has been for all these years that I have seen in my investing years, they take big, large, bold bets. And then it takes a while for those really bets to culminate and really translate in terms of numbers and shareholder value creation, which we have seen in the last 5-7 years in terms of what has happened with telecom. Likewise, I would think within financials, given the fact that India's financial services sector is a pretty sunrise sector, it's a pretty young industry and the potential is huge. I'm sure they have significant plans. And over the next 10 years, I'll not be surprised if they are amongst the leading financial players across different segments or verticals of financials when it comes to Jio Financials.
One quick follow-up on that. I know you have Reliance in your portfolio, and the recent notes seem to be suggesting that the street is kind of working with numbers of doubling the profitability in next 3 years. But what about the valuation of Jio Financials? Even if it lists around 300, what the grey market seem to be suggesting, it would be 2.5 times, 3 times price to book. So what do you have to say about the valuation? Does it become a buy at that level? Would you like to see a roadmap offered by the management maybe at 28th on the AGM, right, 1 week later, before buying? Or how should we analyze our decision making whether to buy Jio Financial at that valuation?
Well, I think there'll be some degree of euphoria initially on the listing day or a few days post-listing, and that should settle down over a period of time in the next, let's say, few weeks, let's say next 4 to 6 weeks of trading, where some of those stock might move from weaker hands to much more stronger hands, and there'll be an impact of Jio Financial moving out of index. So a lot of index funds might be selling during that period of time. That aside, I think from our point of view, Ajay, we are more value investors. We like to buy businesses at reasonable price and valuations. So from our point of view, we'll still wait for a while before we buy into Jio Financials. But having said that, yes, given the fact that all those businesses that they intend to build are at incipient stage, but I think they'll scale rapidly. But yes, the current valuation that is being talked about or what is being projected or estimated, I think that factors in a fair degree of very strong execution over medium term, which I would like to give them a benefit of doubt, given the kind of management pedigree and given the kind of operating management team that they've built. I think they should be able to execute. But the current valuations to begin with do building some expectations out of very strong execution over the next 3 to 5 years.
Stay on with us. Lots more to talk about with you, but after this very quick break.
Right, so we have Pankaj Murarka in conversation. Pankaj, there's a bunch of IPOs which are getting listed, especially in the small finance space. This SBFC got very good reception, not only a 40% premium on listing, but even follow-up buying. Same was the case with Utkarsh Small Finance, which got listed from Banaras actually, and caters to North India as a region. Have you studied this area? Do you have exposure to that in your portfolio in any manner?
So Ajay, one thing I've learned during all these years of my investing is that companies get IPO'd when they're at their best, and which is why we tend to have a sort of skepticism towards IPO, because one, we do not know these companies well in terms of their track record, and secondly, as I said, companies get to the markets when they're at the best of their business performance. And because there's been a lot of euphoria and we are in this bull market, what other phenomena that we are witnessing is companies getting into IPOs or new companies are getting valued much more richly than existing listed universe. So we have stayed away from IPOs because we find more value in credible businesses within the listed space at more reasonable valuations. Having said that, we do look at these companies, and once we develop a better understanding of these companies and they have some public market track records, we are always looking to invest into these companies. And I'm sure some of these companies look pretty credible, but we would like to give it some time and before we really go out and invest in these companies.
Talk about a sector which you have been tracking for a while now. How's the best way to actually play the entire IT theme right now in light of the AI emergence?
Well, I think AI really, from a big picture perspective, I think it sets a new growth engine for Indian IT services. If I look at it from a slightly more medium term to longer term perspective, and this is, I've had very interesting conversations with senior management and CEOs of some of the larger IT companies in India over the last few months. And obviously, this whole discussion about AI becomes very central to that discussion about in terms of how it can impact and influence the business. And one thing clearly I find most of these business leaders and CEOs are really excited about is developing more and more use cases about from basis AI, and which some of these leading companies, most of the companies have actually started doing it. Infosys rolled out some, I think, over a few thousand use cases based on AI and all of that. And they've started winning small projects as well with a lot of their clients on AIs. Obviously, it will take a few years before this you start getting larger deals on AIs. But I think this is what I find most of the business leaders and CEOs are very excited about. So I think, to my mind, when it comes to IT services, because India leads the world in IT services, I think it gives a new pivot and to the whole growth of Indian IT story over the next 5 to 10 years. IT companies have a new growth pivot, which can really ensure that they can continue this high growth path for the next decade, I would say.
All right, Pankaj, we'll let you go on that one. Thanks so much for joining us this afternoon on the show. Well, we'll put the spotlight on the power sector now. You may have seen power stocks are throwing up big surprises. Look at how NTPC has surged to a 14-year high. Solid commentary coming in from REC. Not only the PSUs, a lot of Indian large private sector power conglomerates are actually energy conglomerates witnessing big buying in terms of block deals from foreign institutional investors. So we put the spotlight, what exactly could be the driving force or the triggers for this interest from FIIs. Mr. Ashok Kumar Khurana, the Director General at Association of Power Producers, is joining us now for this special discussion. Mr. Khurana, afternoon. Thank you so much for your time. Let's get your take exactly what's happening in the Indian power space in your view. Changes in policy making, the demand supply environment. What exactly is leading to, there is such a lot of excitement in the market. There is good talk coming in from many power related corporates we speak to. They sound very energized. What is your take?
Firstly, thank you very much. See, with the economic activity picking up, the power sector has seen a massive demand revival and we expect it to increase by another 8 to 9% annualized. Earlier, the problem was that the demand was sluggish, so capacity was lying idling around. But now the demand has picked up. Only yesterday, if you notice, we supplied in the peak 233 gigawatt in the month of August, which is the highest we have supplied till date. And this time is supposed to be a lean period for power, not the peak period. And this revival in demand, if you ask me, is basically the outcome of a series of reform taken in last 5-7 years. Liquidation of arrears, ensuring timely payments, fixation of cost-reflective tariffs, transparent subsidy mechanism, its disbursement and provisioning procedures, laying down quality standards of supply and provision of punishments in case stroke compensation instead of non-adherence, increasing regulatory oversight and accountability. These are the power sector reforms which have been undertaken in last 5-6 years with different rules. This, along with the increasing coal production, last year to this year we recorded about 9.2% increase in coal production, and the transportation bottlenecks taken care of. Now, all these combined has resulted in a complete turnaround in the performance and outlook of thermal segment in India. This change, if you see, has not gone unnoticed to domestic and the foreign investors. And the foreign investors have now shown great interest in the entire supply chain of power, that is generation, conventional and renewable, transmission, distribution, all these sectors, and recent block deals taking place through Abu Dhabi National Energy Company. They have immense interest in Adani Transmission. You have the Canadian pension fund coming in, the Parva Energy, JSW.
Yeah.
Energy GQG investment in Adani's generation.
Right. That's exactly what I wanted to talk about, Mr. Khurana. The series of block deals, like you also just highlighted, be it a JSW Energy or Adani Power, how the influx of foreign capital only enthuses further investor confidence into these companies as well, which for, almost a decade were almost treated like untouchables.
Shimaide, this is actually nothing but an acceptance of the emerging power demand and the reforms undertaken in the last 5 years. That sector, as you said, was untouchable before, has become very attractive, not only for the foreign investors, even for the domestic. If you recall, 3 years back only, there were no taker for stall projects. Today, you see domestic and the foreign PE fund contesting for stall projects. There's a demand for them also to take over. So this is basically a endorsement of the reform process, coal production increase, and the demand revival. You combine all these three, this is what has resulted in the outcome.
Mr. Khurana, we are also observing that the entire value chain of the power sector is witnessing interest and reform. The legacy companies, the new age companies, what exactly do you think, or if you could help us understand, would have gone in the minds of these big institutional investors? They've been watching Indian power sector for a very long time. How are they? What would have gone into their decision making?
If you actually see, the history of power reform. We got huge investment in power sector way back in 2008 to about 11, 12. Then things went wrong because of coal shortage, demand supply mismatch and all that. So all these things are being watched by the investors. They have been watching the steps being taken by government in last 5 years. And the huge investment being undertaken by government in infrastructure. All this has resulted in the performance in the power sector. In fact, all the developers today are looking to actually invest in the power sector supply chain, some or the other, and buy those assets, which, frankly speaking, were untouchable before. Yeah. You saw the race for Meenakshi and other projects where everyone was fighting to get a slice of the thermal projects. But they see the demand will increase, and along with renewables, the thermal power, the coal power will have a significant role in the energy mix of country. Like a very big example comes up is what yesterday, when we touched 233 gigawatt, 80% of that peak demand was met by coal. So coal is here to stay for next 2 to 3 decades. But that does not mean that we have not committed to decarbonization. We are committed fully to decarbonization and the goals set for us. Even in the recent G20 meeting in Goa, it was accepted that it is a phase down of coal, but not the phase out of coal. And coal will stay because every country has to plan its transition based on objective. And our transition actually is pinned on the 3 main objectives. That is energy security, energy access and affordability, and sustainability. The above 3 objectives need to be advanced simultaneously with the transition objective. And government is committed to 500 gigawatt and to 5 million metric ton annually of hydrogen production. So what we are doing is we are going full throttle on all this, along with huge investments in transmission, interstate and intrastate. Corridors are being built so that the energy made anywhere can reach anywhere.
Sure. Mr. Khurana, I also want to understand, just look at the sheer size of the block. This is the first time we've seen the 8% of total outstanding bought by an institutional investor in single company in one block. Not only that, just previously Qatar Investment did the same in Adani Green. GQG not only bought in Adani stock but also in JSW Energy, by the way. So it appears that a few of the conglomerates, the kind of work they're doing in thermal, which is the legacy kind of a power space, as well as the new energy transmission, as well as new energy side, the entire value chain they want to own. What I want to understand from you, that this transformation which is kick-started by the government in the space, does it appear that it is prolonged, it will carry on for a few years? Because these are very long only blue-blooded kind of investors who are coming in. They usually want to hold their positions and see it play out for 5, 7, 10 years.
See, basically, I'll put it, these foreign investors, is a vote of confidence in the Indian policy reforms and those private developers whom they are trusting these investments. They are here for a long time because they know with Indian per capita power consumption so low and government committed to achieving 7 to 8% economic growth, they know the power demand is going to really exceed the current projections even, and all these, and therefore in the energy landscape as it is evolving, not now, as it is evolving, there would be adequate space for renewable and conversion. So they don't want to miss the bus now, and they want to also take a part of the cake here.
Why not? Mr. Khurana, such a pleasure having you on the show today to really help us understand and dig deeper into what's really happening with the power sector and why such interest this time around from some of the marquee FIIs across categories. Good speaking with you. On that note, we're going to take a very quick break with news that the market still is holding on to the recovery. In fact, now we're getting closer to that 19,400 print. Let's see whether we do that or not in the futures. That's anyone's guess. But yeah, leading the charts, Reliance all the way. There's Adani Enterprises, Adani Power, Axis, Britannia, Tata Motors and Maruti, which are actually holding fort amidst the large caps. But let's take in some closing ideas as well before we move forward. Kunal, what's in your list?
Well, I think in terms of the closing trade, one of the stocks which I think is given a fresh breakout, that's AB Capital, looks fairly attractive at current levels of 180 approximately, is almost at the high point of the day so far. I think if I have at the intraday charts, so at 180-82 levels, looks attractive for a short-term trade on the upside.
Right. Naresh, what about your closing ideas?
So that would be a contra buy on HDFC Bank, which has come back all the way down to 1580, 1590, which is a strong support area. Could see a bounce back from here towards 1640, 1660 levels.
Since we've been talking about power, let's take a very quick break. We earlier today chatted with Pankaj Tibriwal as well, and here's what he has to say about the power sector.
So the entire power value chain should do well, whether it be transmission guys, whether it be the generation guys, whether it be the guys who are doing the EPC projects. And we incrementally are quite positive on this space, just considering the demand and supply. India cannot afford to have no thermal power generation. Incrementally, I think we will need to also plan the thermal power generation as you move ahead.
Back with closing trades right here in ET now. So holding around that 19,350 odd level, at least for the Nifty futures, led by RIL. But that pop is easing off somewhat. We're back to 50 points downtick coming in on the Nifty. Having said that, it's a remarkable recovery from the session lows that you've seen. Remember, at one point in time, we were way sub the 19,300 level. Let's see which way we actually head towards close. IT, though, continues to be under pressure. TCS, your top drag. Infy, Tech M, Wipro, they're all in the red as we speak right now. M&M is lower. Tata Steel, Kotak Bank, Bajaj Finance are all stocks which are under pressure. Having said that, Reliance eased off a little bit from the top of the day. Eicher Maruti still holding out. Axis still in the green, and the Adani names continue to hold a buzz as well. The broader market trend will bring that as well up for you, because there too you are seeing a bit of a downtick coming in. 2:1 is the ratio that we've been clocking. So Naukri, LIC Housing Finance, Indiabulls Housing, Birlasoft, Manappuram, these are some of the stocks which are under pressure right now. Anand Tandon on the show then. Anand, just wanted to understand, afternoon firstly, do you sense there could be more pressure coming in for our markets, given that on days when you have a big fall in the world markets, we've been fairly resilient, but at some point the global weakness is going to catch up on us?
Well, most certainly it will. It is not as if we are not integrated with the rest of the world. A large part of the reason why India is trading where it is the return of the foreign investor. And while the domestic flows have been fairly substantial and resilient, one is beginning to see even the mutual fund numbers show a bit of an easing off in terms of fresh investments into equity funds. So overall, I think global flows will definitely make an impact. More importantly, the level at which the market is trading now is slightly higher than where the long-term fundamental numbers are. So it's not as if it is particularly compellingly cheap at this stage.
Anand, what is making you, apart from valuations, because you do look at the global macro data points also very closely, what is making you slightly cautious around there? Is it China? Is it commentary and data from US? What exactly, and what kind of a downside does it open for India?
So globally, obviously, the situation is a little confusing, right? Because on the one hand, everybody in the market expects that we are done with the interest rate raise. At best, you'll get one more in the US. However, I have been arguing for some time now that seems to me too easy to explain away. You are looking at a situation where, assuming that there is no incremental increase in inflation in the US, we will still exit the year with roughly 3%, actually 2.98, but roughly 3% inflation, which is higher than where the Fed wants it to be. More importantly, the question is, suppose you were to ease off and stop increasing the rate more, and you do not get the recession that one had been talking about. Increasingly, the view is shifting to saying that you are going to have a rolling recession, i.e. that you will have different sectors of the economy slowing down at different points of time. So overall, the economy may not get into any major recession. So, for example, commercial real estate is weak right now in the US, and that could start to, remain weak, whereas consumers are still willing to spend money. But if you look at the overall numbers, again, we are getting to a stage that in the next 2-3 years, the overall consumer savings in the US will become tend towards negative. There had been a huge uptick because of the payouts that were made and that was supporting consumers. During the COVID, there was a large transaction that happened from the government. And real estate being weak does take away some of the wealth effect. China, we have already seen what real estate can do, with many of the companies now who are in the real estate business failing to meet numbers, more importantly, failing to make payouts and not being able to complete their projects on time. that kind of situation will impact overall growth in any country, including India, because now we are trying to increase much of our growth coming from the global factors. In India too, consumers now have, for the first time, have a more than 2 lakh crore expenditure on credit card debt. And we've seen more value of transactions on credit card than debit card. That tells you that even the Indian domestic consumer is getting leverage, may not be as heavily as in the rest of the world. So the question remains, where is the demand going to come from for being able to sustain very high growth? And that answer is not obvious. So given the valuations where we are at and the rest of the world at, there is a reasonable chance for a correction. May not be a very sharp correction, but a correction is imminent and therefore should be assumed given the kind of rally that we've seen.
Point taken. Let's quickly take it across to Sharad as well and find out what's the buzz across dealing rooms as we wind up for the week. Sharad, what are you picking up?
Well, yes, in focus we are having Aster DM Healthcare, and what we are gathering from the dealers and the chatter is coming is there's buying coming in certain counters in the HNI segment. Now, even if you look at the volumes itself, it's up 15 times on a 20-day average, and the important thing is the stock is up already 50% from March lows and currently trading at the key 50, 100 and 200 DMA levels. Now, of course, the important thing is the GCC restructuring, the Gulf business restructuring which is happening, and the channel checks suggest that there will be a delay expected to happen because of the complexity of the transactions. Because of that, there might be an overhang remaining on the stock. Apart from this, also the margin in India, that is expected to go up because of also the impact coming in of the brownfield expansion, and also the timely stake of the GCC business would actually re-rate, and there would be a valuation catch-up when it comes to the pair. Now, speaking of valuation, for FY25, the EV EBITDA multiple for the Indian business is at 18 times, and for the Gulf business, it stands at 8 times.
Okay, that's the buzz across dealing rooms, and Aster DM Healthcare, that's the one stock which is in focus. Look, just looking at some of the other buzzers in trade, there's AU Bank as well, which is holding out very smart, a good 2% bump up coming in there. And then look at the move coming in on Ambuja ACC both. Both those stocks are holding up very smartly too, almost a 2% kind of move coming in. There's MFSL as well with a 2% bump up. So these are a couple of buzzing stocks in trade as we speak right now. Anand, just wanted to understand, if we were to fall further, what is it that you're keeping a close watch on to buy, if indeed there is a steeper decline than this?
Well, I mean, it depends on how your portfolio is currently structured, right? If you assume that you have a similar to market kind of structure, obviously the overweight structures will be right now the finance and banking sector. And because it is overowned, it is something that will perhaps fall a little more than the rest of the market. However, it remains one of the areas that is likely to report the most robust earnings growth numbers going forward, even for the next 2 years. And therefore, you would continue to look for opportunities to buy some of the big names there at a lower level. The consumer side, I think, is beginning to face some stress, so I would stay away from it. Cyclically, one of the areas which is weakest is, of course, the IT. And therefore, if they are likely to underperform, given the fact that the near-term numbers will likely be very weak. In that provides you a kind of opportunity for a longer-term investor to find a level at which one is comfortable with to kind of go back and build a position there, because these are companies which have shown the ability to adapt to changing market situations like the kind we are in. And if you see in the US, many of the IT companies have again picked up. Of course, they are not services companies. But the kind of layoffs we saw early in the year has now gone back to hiring again in the IT companies. Eventually, that will mean that as the US finance market, etc., starts to do well, the IT companies in India will also start to see better upsides. So at this stage, like I said, one is looking for those companies where there is a greater level of certainty. Most of the companies like the capital goods sector and the government-related, defense, engineering and railways, etc., are all overowned and overpriced to my mind. So you are likely to see good moves down there. But if they do give you sharp downwards moves, you may want to look at them again, because again, there is definite upside in terms of the earnings that is likely to happen, which is not so much dependent on the market.
Kunal, is there merit in scouting bottom-up stories, or would you say stay with the trend? Look at for the ones which are showing buoyancy, are in an uptrend?
In terms of stocks?
Yeah.
Well, I would believe that in the last 5 months there have been many stocks which have given breakouts of 52-week highs and lifetime highs. And when you see a return of say on an average 40-50% in a span of 4 or 5 months, you're bound to see these stocks correcting by 10-20%. What matters is the structured breakout which many of these stocks have shown. So if these stocks have shown 52-week breakouts and multi-year breakouts, which means that there is a new trend at play for these stocks, and then buy these stocks on retracement. So I think that's a classical strategy which we typically look out for. A few examples, for example, L&T Finance, AB Capital. These stocks have not, they were nowhere close to 10 odd mark or 180 plus mark for L&T Finance and AB Capital respectively since the last 4 or 5 years. Now when you see such kind of a strong breakout for these stocks, you see that there's a change of trend decisively, and that's the case with so many of the other mid cap stocks which have risen up high. RBL Bank, for example, the stock for the first time in the last 1 odd year has broken past about 200 levels. It's sustaining those levels. There is this relative degree of outperformance strength for these stocks. So, typically these stocks have very high beta. So, if you assume that the index is corrected some 600, 700 points, then you would have probably expected that these stocks would correct at least by 10 to 15%, if not more, given the kind of beta nature. But if they fall less and they rise more, that's a sign of relative strength for these stocks. And I see that there is a lot of possibility for many of these stocks which have changed their behavior in this leg of uptrend. So, it makes a lot of sense to buy these stocks on dips. Now, the question is that how do you time these stocks? So we look out for classical retracements like a 38% retracement from the previous rallies or the previous lows for the stock. That's a classical zone to buy. Or if these stocks come back to the individual 50-day moving averages, those are ideal strategies which you look out for.
Okay, that's the tactical strategy in this current market. Seems like we're headed in for a close just around that 19,300 level. So, Naresh, we haven't been able to defend this particular mark on the Nifty decisively, right? What does it then tell you about the days to come?
So it's a slow drift, and the drift is not as much on the broader market as much it is on the heavyweights, because we are seeing a lot of heavyweight stocks taking a knock. Like today, we have IT giving a 30-40 pointer impact. So for now, we continue to wait. Say, if you look at Bank Nifty, it is already at an equivalent of 18,500 to 18,800 level of the Nifty. So from here on, the view remains the same. Globally also, we are at a retest of major breakout point. So next week onwards, we could see some bit of a bounce across the world. It's only when we start seeing a major breakout on, say, a dollar index or some other risk parameter, that is the time to worry. As of now, it's just a slow drift.
Right. Okay, that's the take coming in on which way the market is headed in the days to come. Just analyzing what else has been, down and out, and that's clearly IT that continues to outperform. And Anand, that's the thing, right? Besides few odd sporadic moves in some of the mid-cap IT names or days when, one of the large caps has a sizable block deal, as we saw with LG earlier this week, that $1.6 billion deal that got struck, you are not really seeing any meaningful recovery or even an attempt from within the IT pack.
Can't really be, right? At the end of the day, when Infosys guides and says that, we will barely grow 1%, 2% in the year, there isn't much to celebrate given the fact that you're already still trading at high teens in terms of valuation. So how much can you expect that a company which is growing a couple of percentage points should be trading at? But as I said, the reality is that you don't expect this number to stay forever. Right now there is stress in the US and global banking system. Remember that that's one of the largest areas of growth. The financial segment is one of the largest areas of growth for the IT services business. And therefore, you have a situation where companies, for example, which are specifically targeting other markets, like, for example, the automation for EVs or self-driven cars, etc., continue to do very well and report good numbers, whereas the general services companies, which are much bigger, are finding that there is a weakness in terms of their business outlook. But as I was making a case just a while earlier, that you will get to a level, possibly quite soon, given the rapidity with which things move these days, where some of these companies may come back at levels where you are going to say that, look, these are finally good businesses which are generating large amounts of cash, and given the fact that over the next couple of years they will come back to perhaps a little more normalized rate of growth in terms of the top line, you may want to look at them. So it's only a question of the level at which you are interested in looking at it. per se the industry itself will have to adapt to new things like the large language models, how that's going to change programming. So those uncertainties will get sorted out, and you will find that these companies will be back among the reckoners. So on a longer term basis, at a reasonable price, some discount from where we are, you should see buying re-emerge.
Just want to mark how the global markets as well have been before we get in some BTST trades from both Kunal as well as Naresh. Remember, Japan's core inflation rate, which came out today, fell to 3.1%, which is actually down from 3.3 in the month of June. But the headline inflation number remains stagnant at 3.3%. And also, of course, there are all the concerns around China's property market, and now Evergrande as well filing for bankruptcy in the US. So yes, Asia has had quite a weak close for itself across the board. You have seen deep cuts coming in. Hong Kong lost about almost 2%. China as well on closing was down about 1%. And even the European markets have started off on quite the back foot. So it's a 120-point decline for the DAX. FTSE as well lower by 1%. 1% down for CAC. FTSE MIB as well 1% lower. And similar as the price action across Stock 600 as well. I think the only respite is yes, our markets, they've managed to clearly recover from the session lows. And the fact that US futures are not really sharply lower right now, although the handover last night was weak. Right now, they are just at best a little bit soft. But let's see, it's early days yet, how the markets open there and how they eventually close. That's anyone's guess. But that said, let's get some BTST trades as well going. Naresh, on your list?
So first would be a buy on HDFC Bank, a risk-reward trade here, stop loss at 1575, target price of 1630. Second would be a buy on Indian hotels. We've seen Lemon Tree, EIH make new 52-week highs. This is at the lower end of the last 1 month range. Could be a risk-reward buy. Stop loss at 377, target of 390.
Al, what about your BTST ideas?
So I'll go with a few of the stocks which have been performing very well. Reliance is a buy, expecting the stock to continue its up move from where it left off today as well as a couple of days back. 2640 as a target, stop loss at 2500. And Dixon Tech is also one of the stock which is holding up pretty well at that 4700, 4750 mark. So it's a buy with a target of 5000, stop loss at 4575.
Okay, 254 odd print. And remember, this one was a truncated week with the Tuesday being a market holiday. So it's just 4 days of the price action that you've seen. The Nifty Bank from 44,209 of a high, or rather a low. The high has been 43,614 thereabouts. In terms of individual movers, of course, the Adani group of names have done very well. In fact, the market cap has been the highest since Feb 1st when the Hindenburg news broke and you had a big crack come down on all these stocks. So the combined market cap move of the 10 listed Adani group names has been significantly higher this week alone. That said, IT continues to be beleaguered. Reliance, let's just bring up the over the week chart and show you how that stock has panned out and whether today's move has done anything meaningful for RL. On a net basis, it's only been a little bit of a green, 0.3% or so is what you've seen on RL. The Nifty Bank as well will just come up for you on your screens. Important to mark how that index has panned out for this week and pretty much around the lows, down about almost 1% or so. Naresh, you track the Nifty Bank charts as well pretty closely, right? What next here? Does the underperformance continue?
So the underperformance could be changing here. 43,300, 500 is a very important support level, very equivalent to 18,500, 18,800 of the Nifty. So it's back at the same price, almost the Bank Nifty where it was in December of 22. So out here, the two heavyweights have been underperforming. One is Kotak Mahindra Bank and one is HDFC Bank. But both of them coming back to a good enough support level. If they start bouncing back, the underperformance could change. So positive on HDFC Bank for a short-term bounce.
Positive on HDFC Bank for a short-term bounce. That's the take coming in from Naresh. But on that note, Anand, we'll let you go. Thanks as always for taking the time out and joining in. Let's begin winding up for the week. We're closing in just mildly soft actually. So yes, while we did stage quite the comeback from the session lows, what we haven't managed to pull off in the green, 75 points low on the Nifty futures. That's how we're shutting shop and just about defending that 19,300 print. Let's see post-adjustment where we actually make it to. So 19,318 to be precise on the Nifty futures. Sectorally, of course, while the infra names have held out well thanks to all the contribution coming in from the Adani names, as have done autos, but technology, power, financials, telecom, cap goods, metals, pharmaceutical, oil and gas, they've all been a pack of red. Couple of the newsmakers, and it's important to mark them. So while Adani Enterprises, Adani Powers were some of the biggest performers today, Adani Enterprises, wherein their arm, Mundra Solar Energy, has got the COD certificate for the solar PV manufacturing plant, and Adani Power as well, wherein Abu Dhabi National Energy Company seemed to have acquired a stake in the company. That is what newspaper reports were indicating, but both parties have strongly denied this particular news story. LTI Mindtree and Aflac has selected the company as its digital transformation partner. So that's another stock which was in focus. There was Bata as well, wherein the commentary came from Bata just last evening that they continue to explore strategic partnerships. This is, of course, pertaining to all the buzz doing the rounds, that of a tie-up with Bata and Adidas. Bata actually lost ground after that big move on the stock yesterday, closed in lower by about 0.5% or so. Then, of course, there was a Jain Irrigation. South Indian Bank has been a big mover today after RBI's nod to appoint P.R. Seshadri for a term of 3 years as the MD and CEO. That is one stock which, of course, held out. Indus Towers, Page Industries, remember they're going to be excluded from the Nifty Next 50 from September 29th, the end of this month, that is. So that stock is going to be, those two stocks were under pressure. There was also ACC, Nykaa, HDFC, AMC. Although ACC was a mover, I want to see what's happening with HDFC, AMC and then Nykaa, because they too are going to be excluded from the Nifty Next 50 come month end, or September 29th to be precise. So these are a bunch of stocks which were in focus, closing in at 132 only for Nykaa, and that's a downtick of about 0.7% coming in. A bunch of other names actually which were in focus today. So Sula, for instance, there was NLC. Then, of course, there was the new listing as well, which had a very, very strong debut. We will bring up that stock price as well for you. Sula, of course, the August 12 to 14 weekend has seen the highest ever revenue for them, in excess of 2 odd crore rupees that they have seen, and that's Concord Biotech, closing in with a 27.5% uptick to its issue price. But that's it, done for the week. On adjustment basis, by the way, it's been a sub 19,300 close that we've seen. So let's see what next week has in store for us. For now, it's a goodbye on this edition of Closing Trades.